Well, market continues to gain for the 12th trading session, continues to hover around the 25,250 level. And with that, let's also get in our next guest for the show, that is Mr. Sharan Bansal from Skipper, to understand more about the company's order inflow going forward. So, sir, firstly, to start off with, the order inflows in the first quarter slowed down to around 765 crore from 1,100 that we had seen in the previous quarter. But can you tell us what is the order book position now, and how do you expect the ordering and execution to pick up pace going forward?
Yes, absolutely. We have a closing order book right now of about 5,800 crores as of quarter 1 of this year. And for the full year, we have guided for a order inflow of anywhere between 4 to 5,000 crores. Now, this is in line with our bidding pipeline. See, on quarter, there may be variances. Specifically in quarter 1 and quarter 2, what we are seeing is slowdown due to the general election that have taken place. However, for the full year, we are quite confident that we will achieve our order inflow guidance. So the market is quite robust, and new tender opportunities are consistently coming up. So the pipeline looks very, very strong.
Also, you had said at the end of the first quarter that you are in advanced stages of negotiation with to secure some good size of international contract. Any update on that?
So the discussions are still on, and international orders are flowing in. However, in terms of overall business, the domestic market is far more buoyant, and we are seeing opportunities coming at a much faster pace in the domestic markets right now. Also, we are close to about 85 to 90% capacity utilization. So the short-term orders which we were able to secure in the international markets, those we are not able to do right now due to lack of capacity. We have taken on a capacity expansion plan, which will be for a total capacity expansion of about 75,000 tons. And subsequently to that, we will be able to again capture the short-term orders that are available as well. However, looking at the domestic market opportunity, and as well as the consistent growth in international markets, particularly the developed markets, as I mentioned earlier, we don't see a challenge for order inflows for the year.
Good afternoon, Mr. Bansal. This is Cheryl also joining in the conversation. And since you spoke about CAPEX, just wanted to scratch that point a little further. What are your CAPEX plans, and what is your capacity currently? How much is it expected to increase, say, by the next 3 to 5 years or so?
Our current capacity as of April, beginning of this financial year, was 300,000 metric tons. This year, we have taken a capacity expansion plan of about 75,000 tons. That will take our capacity to 375. This is in line with doubling our capacity from 300 to 600,000 tons over the next 5 years.
Also, if you could tell us the FY25 guidance, which suggests around 25% growth over the next 2 years, basis how 5 months have been, how they have panned out so far, would you want to revise your revenue guidance upwards?
Yes, I think 25% is a healthy growth target that we took on for ourselves at the beginning of last financial year. We took on a target of growing for 25% consistently over the next 3 years. Compared to our guidance last year of 25%, we were fortunate to have done about 60% plus. This year also, we do expect that actual performance should be better than 25%. However, at the guidance for the guidance purpose, we would like to stick to the 25% growth guidance for this year as well as next year.
Right. And also, if you could talk to us about your margins, you've guided for higher margins. Could you actually quantify that number? How much margin expansion are you aiming for? Will it be above 10 to 12%?
Our current EBITDA margins are healthy. We are delivering about 9.6, 9.7% consistently on the annual basis as well as on quarter basis. At the bottom line side, last year our margins moved up from 1.8% in FY23 to about 2.5% in FY24. This year, if you look at quarter 1, we have delivered about 3% on the PAT front. And we feel that this year this should be easily maintained for the full year FY25 as well, about roughly 10% at the EBITDA level and a 3% at the PAT level. Long term, we do expect that as we get better and better quality contracts, and as we move to more and more developed markets on the export front, the aspiration will be to move from a 10% EBITDA level to a 12% EBITDA on the long-term basis.
Well, thank you, Mr. Bansal, for joining us and giving us all those details about Skipper's plan going forward.
If you like this video, then like, share and subscribe to ET Now.